Welcome to the Deep Dive. Today we're really diving deep into Blue Owl Capital. We've got a stack of their 10Ks here, 2021, 2022, and 2023. Someone's been doing their homework.
And that tells me you're not just looking for the surface level stuff. You want to understand the why, the how, the what could this mean down the road kind of insights. And that's where the 10Ks come in.
Exactly. So let's jump right in. Blue Owl, they're in the alternative asset game, right? But they've been on a bit of an acquisition spree lately.
Yeah, and it's not just about getting bigger, it's about getting better. Each acquisition, whether it's Owl Rock, Dial Capital, Oak Street, Wellfleet, each one brought something specific, a missing piece to the puzzle.
So they're building their dream team, but instead of athletes, it's financial experts.
Precisely. Like in 2021 when they brought Oak Street into the fold, gave them that instant foothold in real estate, and if you look at them now, it's been huge for them. But here's the thing, at their core, Blue Owl is all about what they call permanent capital.
Permanent capital, okay.
Yeah.
Sounds intriguing, but also kind of vague. What does that actually mean for their business, for someone like me thinking about investing?
It boils down to long-term relationships, stability. Think of it this way. Most investment funds, they're working on shorter timelines, right? 5, maybe 7 years. They need to show those quick wins to keep investors happy. Blue Owl, they're playing a different game. They're 10Ks. They hammer this home again and again. Long-term vision. They're not interested in quick flips. They want to build something with staying power.
And that appeals to a certain type of investor, I imagine.
Absolutely. Institutions, pension funds, people who aren't looking for a quick buck, but steady, reliable returns over decades, not just the next quarter. And this ties directly into that stable earnings model they keep mentioning.
So it's like a self-fulfilling prophecy. They attract the investors who believe in the long game, which then allows them to play the long game even more effectively.
Precisely. And it's not just talk. I mean, look at their 2022 filing. They lay out their experience, especially in GP Capital Solutions. They're not just saying they're good at it. They're putting the numbers on the table, comparing their track record to the competition.
They're backing it up, which I appreciate. So they have the long-term vision, they have the investors on board, and they've clearly got the experience to navigate the ups and downs. But you mentioned something earlier, a business services platform. What is that?
Now, this is where it gets really interesting. They could just provide the capital and call it a day, right? But Blue Owl, they want to add value beyond just the money. This platform, it's like their secret weapon, and they've been ramping it up, especially in their 2023 filing. It's like having a built-in consulting arm for all the companies they invest in. Strategy, operations, even ESG and DEI initiatives, they're helping with it all.
So it's more like they're becoming a true partner to these companies, almost an extension of their leadership teams.
Exactly. It's a really fascinating approach, and it speaks to that whole long-term relationship-driven strategy they're known for. But let's not forget, even with the best strategy in the world, there are always risks, right? And Blue Owl is no exception. They're 10Ks. They're surprisingly candid about that.
And that's where I want to dig in next. We've seen the highlights, but what about the potential downsides? The things that might keep Blue Owl's leadership up at night. All right, so we've talked about what Blue Owl does well, but these 10Ks, they don't shy away from the risks either. What's the first one that jumps out at you?
Well, one thing that really stands out, especially in their 2023 filing, is their reliance on external partners.
Okay, like who? What are we talking about here?
Custodians, administrators, you name it. They've got this whole network of third-party service providers that are essential to how they operate.
So basically, even if Blue Owl does everything right, something could still go wrong with one of these partners, and that could hurt them.
Exactly.
Right.
A cybersecurity breach at a custodian, a regulatory snafu with an administrator. Suddenly, Blue Owl's in the hot seat, even if they had nothing to do with it. It's a big risk to manage.
It really highlights how interconnected everything is, especially in finance. No one operates in a vacuum.
And speaking of potential disruptions, let's talk about share redemption. Their 2023 filing, they actually flagged this as a key risk, especially with some of their non-traded products.
Right. I remember seeing that. What's the concern there? Something about a liquidity crunch.
Exactly. Imagine the market takes a downturn, investors get nervous, and suddenly everyone wants their money back at the same time. Blue Owl needs to be able to handle that kind of demand, and it's not always easy. They do have safeguards in place, of course.
But it's still a gamble, especially if things go south quickly.
Precisely. And this is where that permanent capital model comes in handy. By attracting investors who are in it for the long haul, they can hopefully mitigate some of that redemption risk. But it's still there, lurking in the background.
Yeah, there's always that what-if factor. And then, of course, there's the whole regulatory landscape. I mean, that's just par for the course in finance, right?
Right.
But Blue Owl seems to face a particularly complex web of regulations.
Oh, absolutely. And they acknowledge that in all three 10Ks, but the 2023 one really dives into the weeds. They're dealing with regulations in the US, internationally, across different asset classes. It's a lot to juggle.
And the rules can change at any moment, which makes it even trickier.
Exactly. And then you've got this growing emphasis on ESG, environmental, social, and governance factors. That adds a whole other layer of complexity. If Blue Owl isn't seen as keeping up with those expectations, they risk losing investors who prioritize those values.
Right, ESG is huge right now, and it's only going to become more important.
Exactly. And Blue Owl seems to get it. Their 2023 filing shows a good understanding of those evolving investor expectations. But there's another elephant in the room, something we haven't touched on yet, and it's a big one.
Oh, okay, you've got my attention.
Okay.
What's this elephant in the room, and why should our listeners care?
It all boils down to control. Who really calls the shots at Blue Owl? And that's where those Class B and D shares come in.
Okay, you've got my attention. What's this elephant in the room, and why should our listeners care?
It all comes down to control. Who really calls the shots at Blue Owl? And that's where those Class B and D shares come in.
We touched on those earlier, but remind me what makes them so special.
They're like super voting shares. Imagine you have one, and I have one, but yours comes with 10 votes. Same investment, but you've got 10 times the say in how things are run.
So even if I love Blue Owl, love their vision, my vote as an investor might not carry that much weight.
That's the potential downside. And if you look at the filings, who holds most of those super voting shares? The founders, some key insiders.
So it's a trade-off, right?
Yeah.
As an investor, you're putting a lot of faith in their leadership, trusting that they'll make decisions that benefit everyone, not just themselves.
Exactly. It adds a whole other layer of analysis. It's not just about the numbers, but also the dynamics, the power structures within the company.
It makes you realize that even with all this information, these 10Ks, there's still this element of trust involved.
Absolutely. And speaking of trust, there's that big question looming, right? Can Blue Owl actually pull this off? Can they successfully integrate all these different companies they've acquired?
Right. They talk about being one firm, but is that easier said than done?
That's the million-dollar question. And it's not something you'll find a clear-cut answer to in any 10K. They can talk about synergies and collaborations, but the proof is in the pudding, right?
So where should investors focus their attention then, if they're really trying to dig deep on this integration question?
Pay attention to how they talk about it. Are they highlighting successes, challenges, both? The 2023 filing, for example, mentions cross-selling opportunities between their different platforms. That's a good sign, but investors need to see concrete results over time.
It's like putting together a giant puzzle, but instead of a picture on the box, it's a bunch of different companies, each with its own culture, its own way of doing things.
And that's what makes this whole story so interesting. Will Blue Owl's grand experiment pay off? Will they create something truly greater than the sum of its parts? We've got these clues from their 10Ks, but the real story, that's going to unfold over the next few years.
This has been an incredible journey through these filings. We've covered so much ground.
Yeah.
Their acquisitions, the permanent capital model, the risks, the power dynamics. It's amazing how much information is packed into these documents.
And remember, this is just the beginning. The real deep dive happens when you take this information, you connect the dots, you draw your own conclusions.
You become a more informed investor, which is what the deep dive is all about. So thank you for joining us on this deep dive into Blue Owl Capital. And until next time, happy investing.